Hey guys, what's up? This is Stock Retail coming back to you again. Second time today if you hadn't caught the first video. So I split these into two parts, just trying a little experiment. I know sometimes I've got a lot to say. Some apes like that. Some apes feel like some of the videos are a little long. So I'm going to attempt to split these into two parts. If you missed part one, I'll kind of tell you real quick what was in that, but just not cover those details. In fact, why don't we just jump ahead since it's already the second one today. In part one, I covered Q2 versus Q3, how we're tracking, just kind of giving some anti-FUD mitigation there on the fact that I think we'll be profitable this quarter. Saw some, just kind of some known shills on Twitter, basically trying to say, how the heck could you think profits? Laid out how it's pretty obvious, frankly, in my opinion. It doesn't mean for sure it'll happen. But anyway, so that's in part one. Price to sales, that is a metric that I kind of flew by. There's even another video I referenced where you can go a lot deeper on that metric. Just kind of taking a look at AMC's price to sales and asking ourselves, is AMC actually a value stock? And then some discussion on staying grounded in reality and how the price action being presented to us is, in my opinion, part of kind of a psychological attempt to break apes. So actually going to go dive a little bit deeper into some of that. We're going to talk through in this video, so everything at the bottom here, the next few days, just kind of continuing to look at the roadmap ahead of us here. You won't get a lot of predictions. I'll just head that off, but I'll just kind of talk through at least a little bit of what I see the next few days and just continuing to remind ourselves and kind of staying up to date so we're not caught, kind of wrong-footed. Do apes know the market? I've had a few. It was actually, sorry, it makes me laugh sometimes when people try to troll me a little bit because sometimes it's pretty obvious to me they have no clue who I am and what my background is. You can certainly, I think, with logic, take apart some things I say from time to time, right? I'm human and none of us knows everything. But when people attack me in certain ways, it honestly just makes me laugh. So we're going to talk a little bit about that, but not so much talk about just me, talk about apes as a whole. Like, what have you been learning and how much do you know the market? And should we be letting people, I think, gaslight us a little bit and tell us, oh, you poor guys, you don't know what you're talking about. So we'll cover that a little bit. We'll talk about the price action the last few days. You can see already I'm tipping my hand. I think it's pretty unnatural. So we'll talk about that. All that's going to tie together. And then we're going to just round out with just using logic for ourselves. The whole point of part one and part two, I kind of talked about it in the other one, is just staying tethered, staying tied to reality. When someone is trying to fool you and present you with kind of an alternative reality, being tied to something that you know is real kind of keeps you grounded and keeps you from being blown around by the wind, or in this case, by a bunch of hot air from Shorty. All right, so just reminders. I think everybody knows these things, but let's just keep ourselves clear. So tomorrow I kind of view as separation. So Thursday, August 24th, AMC will be reverse split, but Ape will not yet be reverse split. Now I know some of you have gotten hung up on language. Technically, Ape is not getting reverse split; it's getting converted, but it is getting converted at 1 to 10. So in that way, it's being reverse split. I covered the kind of wonky details of all that in several other videos. I won't do that today, but I've proved it with AMC filings. AMC themselves have come out with that and said that anyway, so don't have to cover that again. But what that means is tomorrow, AMC in theory would be kind of like 10x on the price, but obviously divide by 10 on the shares. So that price, when you look at the chart tomorrow, if you have those two next to each other as I do in apps where you track stock prices, it's going to look funny, right? Because you're going to see AMC be probably at least 10x the price of Ape. So that's going to be interesting to watch. Certainly, it's going to be interesting to watch how are brokers responding to the reverse split, how is the market responding, how are apes responding, all of us. So watch that. And just don't get shocked if you see, why is Ape like 1/10 of the price of AMC? Well, now you know, because Ape has not yet been reverse split. AMC has tomorrow. But you can kind of see, tongue-in-cheek a little bit, finally getting back together after a year apart. I missed you, AMC and Ape getting back together. So the 25th, Friday, that is the day of the conversion. Remember then that in pre-market tomorrow, I believe it was, that AMC will not trade. I think that starts in the market open. And then the 25th, I believe, Ape will not trade. I made a whole video of all of the step-by-step on that. Go find that. I may have to remind myself, watch my own video or something, or just pull up the PowerPoint I did. But I believe Ape is not trading on Friday, and you'll get that conversion. Now, remember then, of course, you've got the settlement. Probably should have referenced that directly on here, but that's what I've got as August 28th and beyond. So remember that the settlement technically happens kind of as of the 25th. It's really as of probably the shares you owned as of the 22nd on AMC only. I say that because you've got this whole process of ex-dividend, and I had explained to you in some other videos, T+2, and you want to own it a couple days before there's any, dividend-ish kind of a thing. Obviously, this is a settlement, distribution of shares. But anyway, the point is, you'll get that settlement, I believe, Monday the 28th, but that's going to come down to your broker and oh man, guys, I'm suddenly forgetting the term, but computer share, man, it's going to come back to me as soon as I'm done recording. But the people who basically AMC is using to pass out the shares, they will send those to the brokers. The brokers will put them in your accounts. As we saw with Ape previously, that took a minute, right? For some people, it took a lot of minutes. And by that, I am being facetious. I even mean many days. So if you don't immediately have your settlement shares on the 28th, hold tight, talk to your broker, push them a little bit, just to make sure there's no shenanigans, but you should be okay. AMC even put out language that could take some days. So let's just track that. I'm sure we're going to track a lot of FTDs as Ape converts, as the settlement should be handed out, all of that kind of stuff. And then keep in mind, though, this top right bullet, AMC has that $25 million, I keep saying dollar, 25 million share at the market offering. So they will be selling from time to time, their language, shares into the market. Now, you're going to hear a lot about dilution. I've covered that before, so I won't go in detail today. Find other videos on that. But the flip side of dilution, you don't just dilute and then sit on that cash and do nothing. For 8 out of 10 quarters, I showed you that AMC has paid off debt, sometimes as much as a 50% discount on that. Most recently, I think it was like a 34% discount. I might be getting that wrong, but I know it was in the 30s. So imagine if I say to you, hey, will you give me 10 if I give you 13 back? Yes, you would do that. Well, that's what's been happening with the dilution as of late. They're diluting less than the amount of debt that they're paying off. That saves on the debt paid off. That goes straight to the balance sheet, but then it also saves on interest payments. Covered all that. So just remember in your mind, as everybody talks about dilution, the flip side of that activity, the next step, you dilute to get cash or capital here, I'm saying, and you do something with it. What you do with it creates value, it's value creation, not just dilution. All right, options. The next few days, prepare for a ride. We started seeing some things today. I was looking at my broker. I already have the AMC2s, so all of my AMC options already have the title of AMC2. I did not see the strike prices change yet. Had some DMs with a couple folks who were hitting me. Interesting to watch that those strike prices didn't change. So let's keep track of that. As the reverse split goes through and the conversion, my AMC ones still say AMC one. And remember that there's really 3 options chains. So you've got the AMC ones. Those were the options like if you held before Ape was created. All those options from before Ape was created became these AMC ones. They have basically AMC and Ape in them. And so as they reverse split and convert back, those are going to, there's some math on how many shares are in there. It basically amounts to, I think, 20 plus, because you got to figure out the settlement, but then also you get kind of 10 from Ape and all of that. So those are kind of going to be very different. And I still held some. Don't get me wrong, I'm way down on those. You can imagine if I held options that included AMC and Ape from a year ago. I've got some Januaries of those. Pardon me, well down on those. But, I'm an Ape. I hodled. We're going to see what happens with those. Pre-reverse split AMC, so just normal options on AMC, not those AMC ones. Those are what become those AMC 2s. So that's why I've got some of those in my broker account right now. By the way, guys, just to be real clear, I am like way, way, way deeper in shares than calls. I'm not an options chaser. But I do hold some options. And that's maybe a whole other discussion for another day of being careful as you invest, being thoughtful, and, buy and hodl isn't really chasing weekly options or anything like that. Opinion there, feelings, I suppose. All right, and then you've got options that'll happen post-reverse split, like new options that are created, and those, I believe, are the AMC 3. So that's going to be funky. That's going to get a lot into, and even some stuff that's over my head in terms of how these guys are going to balance their books and manage their margins. We believe that options chains have been used against us to manipulate the stock, to bury FTDs, a lot of that stuff. So it's going to get real complicated for brokers and market makers to manage here. So keep an eye on options. Let's just all follow, and we'll be doing DD in coming days, right? And then kind of mentioned or glossed over that the settlement is included in the math of some of these options. So those AMCs and those AMC ones that existed before the split, there's correction for the settlement. I did I think a whole video on just the options language from the OCC. So you could find that, or just Google OCC, AMC, maybe memo or something like that. You'll find the language, or I covered it. Okay, so this question, do apes understand the market? First, let me tell you a tiny bit about who I am. I'm going to just breeze by it because if you've followed me a while, you've already heard me say this too many times. Just going to say it for people who are new here and for Shorty who wants to troll me so that you can at least do it right. All right, so first of all, I have 3 degrees. My undergraduate's in psychology. I have an MBA, so that's a master's in business administration. And I actually have another master's. It's a master's of science in a specific business discipline, basically. I got a master's in a part of business. So you're talking to someone who's read a few books, let's just say, and taken a few tests and written a few papers. It doesn't make me some genius, but it just means I put in the work and I learned some stuff. 21 years I worked at a Dow Jones company. I guess there's a couple apes who kind of know what that is, but for the most part, I just leave it at that. So it's one of 30 companies, basically. The Dow Jones 30, I'm sure most of you know, that's the index. Like when you see the stock index, the Dow, that's what I'm talking about. There's 30 companies in there, so I worked for one of those. Effectively, it's one of the kind of 30, I won't say quite big est, but one of the 30 biggest companies that there is. I worked there for 21 years, certainly have some training in business, is all that all means. Doesn't mean I fully understand the markets, but I was also investing that whole time. So I understand business, I understand fundamentals, I understand the maths, and know a thing or two about the stock market. But here's the thing. Also, that means I spent a fair amount of time kind of reading a lot of papers and books, as I mentioned. And why does that matter? Because I still have access, actually, to a thing called JSTOR, JSTOR, which has a ton of academic articles. And so, here's who Shorty's dealing with. Like, some apes, myself included, do things like actually going out and looking at academic research on what's been going on in the marketplace. And by the way, I'm going to bring it back to more of kind of everything apes have dealt with, too. I realize maybe there's not a high percentage of people doing this. But so I want to show you guys some of the types of things I've read the last few years as we've been in our journey. And I want you to, I'm trying to give you tools so that you're not gaslighted either. These are academic research papers that have been written as like doctoral theses and stuff like theses. Anyway, high-level papers that reviewed by professors and that kind of stuff. Look at these articles. The Business Ethics of Short Selling and Naked Short Selling, right? I read that one a while back. The Effects of Stock Lending on Security Prices, an Experiment. Someone had asked me to take a look at that quite a while back. And by the way, kind of found out, in many ways, sort of like, like back in the day, certain industries, like say the tobacco industry or something, would pay for research that made them look good. That's what I was reading this article. And so, I don't just read articles and just believe them either. I'm looking with kind of a critical mindset. And as I was reading this, I was just taking all these notes and just tearing this thing apart. And I was like, this is terrible. This is dumb. I didn't like a lot of the points they were making. I didn't agree with their methodologies. And then I found out that it was basically funded by a hedge fund. So it's like, oh, okay, no surprise there. So you do have to also actually look at these things through a kind of a critical lens. But the point is there's people out there doing that. Price efficiency and short selling. That's another article out there that I've looked at. Oops, oh darn. You know what? I'm going to get out of the animation for a minute because I can tell I just didn't do this right, and these are going to be hidden, and I want you to see all of them. Sorry for doing this live, guys, but we'll just bring this to the front. So here's another one. Nope, we already did that one. Sorry. I am not going to refilm this. You're just going to come on this journey with me of me looking silly, and that's fine. All right, so predatory trading. That was a whole article I read, and someone I wouldn't mind talking to. So someone ever knows Dr. Marcus Brunermeyer, wouldn't mind talking to him. I don't know who the other person is as well. I apologize. So I would name them too. Lasse Peterson. Anyway, ETF short interest and failures to deliver. Basically taking a look at naked short selling. So here's just a whole smattering. It's just a few. I've read a lot more. And actually, what I want you to know. Let's just go back here. What I want you to know is there's a ton of academic research that basically says apes are right. Okay, some of these are from like 2008. They're older. You can imagine there was a lot of scrutiny back then. But there's all kinds of academic reviewed articles with, let's call it scientific methodology, that basically say the things that we're talking about are happening. Yeah, there was stuff in here I read about high frequency trading. There's stuff about internalization and wash trading and all that kind of stuff. So don't be gaslighted. Don't let someone who was a simple throwaway, comment on one of my YouTube videos of like, oh, you silly guys, you just don't know what you're talking about. I don't really swear much, but BS. We've been in this for 3 years. We've been researching this. We've been living it. Frankly, guys, who cares about all this academic stuff? Sometimes just living things. People talk about book smarts versus street smarts. When you've lived it and it happens to you and you see it day to day, don't let anyone fool you that this stuff isn't happening. Just show them the door as far as I'm concerned. So what have we been learning for 3 years, guys? We think about the things that we've seen, that we're up against, and that in many ways we've been documenting. I've got all kinds of screenshots. I used to track it's called like the level 2 trading data. I don't have like level 3. I don't have a Bloomberg terminal, but there's apes who've even been tracking that level of information. But I've got just screenshots up the wazoo. Hopefully someday we have some kind of big class action against all these shorts and hedge funds and media arms. I'm talking to you guys too. And apes have a lot of receipts and we have long memories. So what have you been seeing for 3 years? So pay for order flow, but why does that matter? So including front running and trade ahead. Well, guess what? That's illegal, and they claim they don't do it, but we know that's happening. Back in the day, I still remember when Ken Griffin said, "Well, pay for order flow is an expense for us. It's a cost," and it's like, well, let's think about any business anywhere in the world, in any industry, with any leader. Would you pay for something if you didn't see the opportunity to receive value from it? They pay for it for a reason. That's why it's pay for order flow. There is a reason they pay for it. It's because they can front run us and trade ahead and feed it to their algorithms and their high frequency trading that can trade ahead of us in nanoseconds. And they can evaluate our behavior, right? The whole stock market is one big algo right now, in my opinion. FTDs, we know we're dealing with that. I don't even have to cover that. You guys are watching every day. I don't know, by now, perhaps we're going to find out we're at day 43. I haven't looked yet as I filmed this. And I believe we're getting close to 50% of the entire year, 50% of all trading days that AMC has been on the threshold list. I mentioned high frequency trading. We're going to talk about something called wash sales. So effectively, what would happen if in nanoseconds I was able to trade small unit orders, 1 and 2 and 3 shares, back and forth and back and forth and back and forth, and even effectively make thousands or in some cases even millions of trades in a few minutes? I could drive the price with that. What if I traded to your computer, and the next thing you trade back to me like a penny down, or even a tenth of a penny down, and then I trade back to you another tenth of a penny down, and around we go, and we drive the price of a stock down or up. People can do it up too. So high frequency trading, learn more about that, but a lot of you already have, and that's a big deal, and I don't think it's good for us at all. Spoofing, they've been saying, no, we don't do that, but go look up, JP Morgan and I believe Goldman Sachs and these guys. There's people going to jail over having spoofed the gold market for years, and of course for years saying, no, we don't do that. There is evidence, a lot of evidence, that people are spoofing AMC. There's a few Twitter accounts who even regularly update about that. I used to myself. I don't as much these days, but that is a big deal too. And effectively, you can create kind of stink orders or these dummy orders that you never intend on filling, but that can drag a price down. Set fake sell walls and all these kinds of things. Ladder attacks. We've talked a lot about short ladder attacks. I'll try to speed up here, guys. I'll go through this fast. I didn't intend on educating here, but I'm just saying, you guys have seen all this stuff. All this is happening to you, and you have learned about all of this. You're becoming experts. Don't let people tell you you're not. Ladder attacks, naked shorts, shorting ETFs, short and distort, internalization. That's one, if you haven't not as many apes maybe have dug in on that one, understand why, orders can get parked and then satisfied later internally. That kind of connects back to the FTDs, and it connects to off exchange trading as well, which is the next line. And we call that dark pools. affectionately or frankly angrily. But really, I think what most people mean when they say dark pools is just any off exchange trading. And that's a big deal and it's a problem for retail. By the way, this entire page, every single one of these things is bad for retail. Our market is not set up for us. And this is what we're up against. And this is why I'm not leaving. Algorithmic trading. I used to, you can go back on Twitter. I mentioned I've been here on Twitter a lot longer. Said that on a few videos. I've got all kinds of receipts, and I've got a lot more on my phone where you can basically watch those level two, the trading information, and you watch kind of the lot sizes, and they'll start signaling to you. And you can also even find like whole spreadsheets out there that show you what the signals are. I'm not talking about the wholesaler signals. I'm talking about the algorithm is signaling, is the price about to go up or is the price about to go down? And it kind of drives to certain prices. There's a correlation with prices. And then options manipulation. That is something we've dealt with up the wazoo, including parking and burying FTDs, kicking the can on timelines, the T plus 35 timelines, creating, naked shares through options, all of that kind of stuff. Here's the thing. All of that I just told you, we're in the era of blockchain, guys. It is entirely possible. The technology has existed for a very long time to give a stock a unique ID. Let's just say, like you've got a fingerprint, right, in real life. You could give a stock this ID that says this share is, think of this term non-fungible. You've heard of NFTs, right? This share is non-fungible. It is, share number 1 or share number 2 or share number 3. It's got an identifier. And you could track it, and you could know exactly where it's been, when it's been, who has had it, what they sold it at, time and date, all that kind of stuff. And there would never be an opportunity to create any synthetics. So ask yourself, in an age where the tech already exists, to never have any of this synthetic shares and failure to deliver, and do I have a real share in my account or not? Why is that tech not being used? I mean, it's an easy answer. People can make money. The answer to all of this comes down to people can make money off of it, and so they don't mind the fraud, right? But we do mind, and that's why we're not leaving. Speaking of wash sales and all of that high-frequency trading, let me read you something. And by the way, I'm going to tell you, you can go look this up, and I'll tell you how in a minute. So this was a professor, kind of says, all right, hey, thanks for a question, basically, and he says, so wash sales for a long time in markets was a good way for manipulators to kind of, hey, look at this liquidity. Have we heard about people kind of creating liquidity too? Look at this price. Pricing signals. I just mentioned it's a way to adjust the price on a stock. So that's why in the U.S. SEC, Securities and Commodities Markets, we say no. We don't. We still have it. It's one small core thing that's not allowed. Yeah, well, I don't think so. But there's no ban on wash sales. Although there's academic literature, so no ban on wash sales, there's some studies. Some competitors, some exchanges study other exchanges to say they have a lot of wash sales over there. So we don't know how real these volume figures are. Ever notice how suddenly you don't know where from AMC has a buttload of volume last few days, right? Where did it come from? It wasn't news. All of this huge volume and we went down, down, down. Well, that's kind of interesting, isn't it? This professor goes on. The other thing that I find interesting is the average trade side. I think this was size, actually. This is a transcript, so sometimes transcripts, if they're automated, they miss it. But trade size, $200 to $1,000. Remember I talked about lots of little trades? A couple of them, a couple thousand. I mean, these are not large transactions, Kelly. Do you know who this was? This is our buddy. This was Gary Gensler when he was a professor at MIT. Go look up Wash Sales, Gary Gensler, MIT. You can find the video even. You can watch him. It's like a free class that's out there, which also, by the way, little plug, there's a lot of free classes from a few universities, MIT being one. You can just go watch lectures and things and learn some stuff. So here was, years ago, Gary Gensler saying, hey, basically read between the lines, guys, and you can see more in that lecture. And also, by the way, he was talking about crypto too, and this is years ago, effectively saying, yeah, wash sales, it's a problem. You can kind of manipulate the stock market through these wash sales. And what would happen if you could do that with high frequency trading with millions of trades in a few seconds? The stuff is real. So when people tell you this list here, oh, you poor guys, you just don't know how it works. No, here's an MIT professor, Gary Gensler himself, talking about the stuff that we are saying we don't like. Okay? Don't let people gaslight you. Yeah, go find that. Check it out. Speaking of high frequency trading again, did you know years ago you can find this on YouTube, or you can actually go. I'm showing you a tweet that I shared, I guess, a year and a half ago, not quite. Um, Eric Sprott was out there talking about high frequency trading and how retail needed to be protected from it. Well, if you don't know, when we invested in Highcroft, Eric Sprott was one of the people who also joined and invested at the same time, and is kind of into mining. I think he's a Canadian investor who's got some past investing in mining. Actually, funny, I had not remembered. If you see, this is just kind of I don't know if I want to call it famous, but an account a lot of apes know, Sal Meme Lord. Interesting. Hat tip to you, buddy. I didn't realize you were the one who first had posted that. When I even took this screenshot, I didn't even catch that. So, yes, glad that I mentioned you there so that I could remember that today. But I'm derailing. Guys, the point is, interesting to note that someone who has been out there advocating that retail needs to be protected from HFTs joined AMC investing in Highcroft. Now, I think there's a chance Eric has since left that trade, but I'd have to go double check that. But the point is, that's pretty notable and interesting. So, speaking of humans against the machine, right? I talked about algorithms, talked about high frequency trading, I talked about sudden spikes in volume and where did they come from. Look at where we'd been in AMC for a while, right? We were kind of going up, up, up. These are daily candles here, just from Webull. Said many times on here, Webull's not my broker. I just use it as an app to kind of look at on the phone. Pretty clear trend for a while, and then poof, boom, boom, boom. What news can you think of, right? There wasn't news. It's just the conversions going through the reverse split. And certainly the narrative has been set up for a long time by the short and distort crew that it was the reverse split itself that would do this to us. Baloney, nothing changed, in the business. There's no reason for this. This is definitely not humans. Imagine, I asked this, actually I'll cover more in a minute, but like, did you and all of your friends and 3.8 million of us suddenly decide, hey, I guess we're out of this trade? I mean, that's the kind of extreme price action this shows. No. Or look at just the shape of this. It's a freaking stair step, right? That is not humans trading. It's just not. You can't gaslight me and say that that's natural price action as a result of, efficient market theory and a bunch of humans trade. There are 3.8 million apes. I guess we're not all apes, but 3.8 million shareholders in AMC. You cannot create lines like this with human behavior across 3.8 million people. It does not happen. It's just not logical. And so we know what is logical then is basically manipulation, right? So just continue to not let yourself be gaslighted. Make sense of what's happening and ask yourself, the act of 3.8 million people should be some push and pull and some up and down and a little more smooth lines and all that kind of stuff. It doesn't look anything like these. And the act of suddenly dropping should have news. The only recent news we've had is positive earnings for the first time since pre-COVID. That should absolutely have slammed the shorts, right? So I'm sticking around. By the way, I talked in the last video, or 2 videos ago, I guess now, because it was yesterday. If you notice these moments where the stock kind of starts to go flat, at least for Monday and Tuesday, Friday and Monday. I gotta keep my days straight. Yeah, Monday and Tuesday. Monday and Tuesday of this week, we basically stopped diving so hard around the time that Europe brokers were closing. I said London in the video, but I suppose I should have thought through, you got brokers in Germany and France and stuff like that too. So London tends to be the one a lot of us track because that's more of a worldwide financial market, a bigger financial market. And if I go back to Gary, right, he was talking a little bit about some of these things maybe not necessarily being outlawed overseas. And there's ways that apes believe shorts can be kind of hidden overseas as well too. So just keep track of that. If you're a DD ape and you're kind of listening to this, hopefully I've spurred some thoughts in you and you might dig a little deeper into some of that too. So let's just ask ourselves then, all right, if that's not natural and we know there's all these mechanisms for cheating, then why now? We've been in this play almost 3 years. Why this sudden extreme, and actually that's the second question, why so extreme? And speaking of extreme, I mean, Apes saw some tweets out there. There's literally some death threats starting to go out, or some people also talking about storming, you know, headquarters and AMC headquarters and stuff like that. So I think the moment you see someone talking at all like that, one, report it. Two, ask yourself, why in the world would I ever listen to a person who's that unhinged? And so I've said for a long time on this channel, please start asking who has credibility and who does not. And even look at who people follow. This person who made a death threat follows several YouTubers who have long been very negative about our stock, and follows quite a few people that I had blocked. And so I was like, all right, you just learn over time how to spot connections. Who follows them? Who do they follow? I suppose by saying this out loud, Shorty's going to learn a little bit, but for the most part, they're just not that smart. They tip their cards to us. They show their hand, I mean, of who they are. But, why now? Why so extreme? Well, we know. So the reverse split, the conversion, bringing everything back together, access to capital, the fact that Adam can now sell some shares, they're deathly, deathly afraid that this is the death knell to the short thesis. I've said for many videos, going all the way back, I think, to when the Antara deal was first announced and the vote was announced, like back last November, that if shorts wake up and find out AMC is either debt-free or at least has, far more manageable debt, that should have them awake at night. That's nightmare level stuff for them. So of course, they're driving the stock price down hard using all of these methods I've talked about. If you're in, crime investigations, or in, like, let's say the legal system, people talk about means, opportunity and motivation, right? So if these guys have the means, all those tools I've talked about, if they have the opportunity, and they certainly have the motivation, then a lot of times those are the kind of tests you've got to pass to at least accuse someone of a crime. So, and then ask yourself too, why would the news partner? We're seeing things from places like Seeking Alpha and The Street and Market Watch and Market Beat. By the way, if you don't know, all of those that I've just named and Motley Fool are owned by hedge funds. So you're probably getting your financial news from people who want certain outcomes, right? You're getting financial news from people who are owned by investing arms. That's important to know. And then you can these answers to these whys are pretty obvious and right in front of your face. And there's a reason why I'm showing this chess piece. But for me, I know what I hold. And the point of this picture is just showing just how valuable it is. And there's one or two apes who might know kind of another message I'm sending. But the point is really just how valuable is what I hold. So I'm not going anywhere, because I know this company has turned profitable for 2 quarters. There'll be plenty more coming. The fundamentals are better. Go back and watch the last video I just did, part 1. Better now than in 2019. Apes are here holding, and we're here for each other, and we're not leaving. So let's go.